Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Kevin Davitt, Head of Index Options Content at Nasdaq, to discuss the type of index option trading generally that curves around the quarterly expiration cycle. Kevin, it's great to see you as always. Welcome back to Trade Talks. And before we get into the end of the quarterly cycle, I want to ask you, what's capturing your attention in the markets this month?
Well, Jill, thank you for having me back. And to your question, in general, I've been struck by the lack of volatility, which does run counter to typical seasonality, but that could change following today's quarterly expiration. So a significant amount of exposure will roll off in equities and in indices today, which might widen the trading bands in the coming days and weeks. From an options volume perspective, on the equity and ETF side, trading has slowed slightly when you compare it to the past few months. Not dramatically, but we continue to see this range-bound, fairly low vol market. So it's not surprising to see some of that volume drop off. And the volume remains concentrated in the top kind of 10 to 20 most active symbols. If you shift to the index side, volumes continue to move higher. And this is a story that I have told on Trade Talks with you often, and I'm excited to tell it. The growth in index options has been, from my perspective, one of the more compelling stories in the derivative markets over the past couple of years. From a Nasdaq perspective, volumes in NDX have been growing faster than the overall index option rate of change, which is really exciting. It's something that I pay close attention to in my role, and I'm emboldened to see very consistent volume. So another way of putting that, it's not been like peaks and valleys where one or two chunky days are pulling volume averages higher. It's consistent, sticky volume. And from a corporate standpoint, that's what we like to see. Based on our data, there's growth on both the institutional and retail side with regard to NDX. So it seems like end users are finding a variety of ways to potentially monetize the volatility of the index. And then just one last note there, yesterday was the most active session for our XND options in nearly a year. XND, as I've also pointed out, is designed to track the Nasdaq 100 index, but it's 1/100th the size of the full product. So it's much more approachable for smaller wallet size accounts that have options approval.
Yeah, that certainly is encouraging news. What about when you look out a bit further? What's the focus for the next month or so?
So a lot of the focus will remain on the probability of a rate hike at next week's meeting, which has been collapsing over the past couple of months. Economic data, broadly speaking, has been mixed, but this week's CPI release seemingly solidified the probability that the Fed is going to stay the course at 5.25 on Fed funds for the time being. Now, the odds of one more hike toward the end of the year have been chopping around 35%, and that's been relatively stable. My colleagues on the economic research side put out good work on that this week. It's important to note that these are all probabilities and that they can change quickly. And when I think of where we're at in the year and I think about quick change, I can't help but point out that 15 years to the day was the Lehman Brothers bankruptcy filing, which was when a subprime crisis kind of cascaded into a global financial crisis. And we're also nearly 25 years since the failure of long-term capital management, 5 years since the Chinese devaluation that kind of triggered a global sell-off in 2018. My point here is not to stoke fear, it's kind of twofold. I think that the ecosystem, a term that gets thrown around a lot, continues to mature. But like any system, it's fragile. It's also much more global than it was a few decades ago. The backdrop lately has been very calm. In fact, if you look at broad markets, they haven't made a sizable daily move in months. So drilling down there, the S&Ps haven't closed plus or minus 1.5% in about 4.5 months. That's unusual. It's the longest stretch within those bounds since 2018. If you look at the Nasdaq 100, it hasn't had that close over close move of more than 2.25% since the day before standard July expiration. That's 40 sessions, and there hasn't been a 2.5% move since just before Memorial Day. So data shows that volatility clusters, and if you wanted to use a fancy term there, it's heteroscedastic. Low volatility often begets low volatility, but the flip side is also true. Again, not trying to stoke fear. I'm just pointing out that things can change quickly, and index options can be powerful tools if and when volatility regimes kind of flip.
And finally, Kevin, what type of index option trading generally occurs around the quarterly expiration cycle?
Yep, so we have our quarterly expiration today, and I think there's a variety of ways that you can measure change at expiration. If you look at notional values, and this is according to Goldman Sachs research this week, about 3.4 trillion in exposure is going to roll off today. That's a lot of optionality expiring. When dealers or liquidity providers are long gamma, they own gamma into expiration, the effect there can mute overall swings in the underlying markets because of their natural hedging flow. Today, that gamma profile will change, and sometimes there's an unlock where ranges kind of widen after expiration. To answer your question more specifically, exposure is either left to expire or rolled out in time. And so the real shift, it occurs in the Greeks for option users, where long or short gamma tends to fall and Vega exposure can increase if those positions are rolled out in time. The last point here is that there's been very real growth in products that wrap optionality in an ETF. Some of these are designed to roll out quarterly, and typically that's at the end of the month. So in the next couple of weeks, those products will systematically shift out to the end of Q4 based on their mandates.
All right, Kevin, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.